Do you want to solve your financial problem? Follow my channel Mr. Swan, and a lot of fun and informative videos can be found on this channel. Hit subscribe. Let's learn smarter, not harder. Asterisk.
13. Rental income. Investing in rental properties is an effective way to earn passive income, but it often requires more work than people expect. If you don't take the time to learn how to make it a profitable venture, you could lose your investment and then some, says Graves. Opportunity to earn passive income from rental properties. Graves says you must determine 3 things: how much return you want on the investment, the property's total costs and expenses, financial risks of owning the property. For example, if your goal is to earn $10,000 a year in rental cash flow and the property has a monthly mortgage of $2,000 and costs another $300 a month for taxes and other expenses, you'd have to charge $3,133 in monthly rent to reach your goal. Risk. There are a few questions to consider. Is there a market for your property? What if you get a tenant who pays late or damages the property? What if you're unable to rent out your property? Any of these factors could put a big dent in your passive income. And economic downturns can pose challenges too. You may suddenly have tenants who can no longer pay their rent, while you may still have a mortgage of your own to pay. Or you may not be able to rent the home out for as much as you could before, as incomes decline. And home prices rose quickly, due in part to relatively low mortgage rates, so your rents may not be able to cover your expenses. You'll want to weigh these risks and have contingency plans in place to protect yourself.
14. Buy crowdfunded real estate. If you're interested in investing in real estate but don't want to do a lot of the heavy lifting, management, repairs, handling tenants and more, then another option is using a crowdfunding platform to invest in property. An experienced investing team picks out the real estate, and then you can decide to invest in it and how much you're comfortable with. You'll pay an annual management fee to the real estate platform and have minimum investment amounts that could range from $10 to tens of thousands of dollars. Opportunity. You can get access to private real estate deals that may be attractive and they've been pre-selected by knowledgeable investors. You can check out the returns on the platforms, so you'll have some idea of what level of returns you can expect and over what time frame. Real estate investments can also help diversify your portfolio, helping to smooth your returns. Some platforms invest in equity stock, while others invest in debt. Generally, stock offers high returns in exchange for more risk, while debt offers lower returns in exchange for less risk. Some platforms require you to be an accredited investor with a certain minimum income or assets. Popular platforms include Fundrise, Yield Street, and Diversifund Risk. You're on the hook to make your own investments on many crowdfunding platforms. So, while past returns may look good, they're no predictor of future success, and you'll have to make the judgment call about what to buy. That means you'll need to read the prospectus for every deal you're interested in and understand the pros and cons. In addition, real estate is typically funded with high levels of debt financing, making it more susceptible to any economic downturn. You'll also want to understand how long your money will be locked up in the investment and when you can access it, especially in an emergency. 15. REITs. A REIT is a real estate investment trust, which is a fancy name for a company that owns and manages real estate. REITs have a special legal structure so that they pay little or no corporate income tax if they pass along most of their income to shareholders. Opportunity. You can purchase REITs on the stock market just like any other company or dividend stock. You'll earn whatever the REIT pays out as a dividend, and the best REITs have a record of increasing their dividend on an annual basis, so you could have a growing stream of dividends over time. Like dividend stocks, individual REITs can be riskier than owning an ETF consisting of dozens of REIT stocks. A fund provides immediate diversification and is usually a lot safer than buying individual stocks, and you'll still get a nice payout. Risk. Just like dividend stocks, you'll have to be able to pick the good REITs, and that means you'll need to analyze each of the businesses that you might buy, a time-consuming process, and while it's a passive activity, you can lose a lot of money if you don't know what you're doing. Like any stock, the price can fluctuate a lot in the short term. REIT dividends are not protected from tough economic times either. If the REIT doesn't generate enough income, it will likely have to cut its dividend or eliminate it entirely. So your passive income may get hit just when you want at most. 16. Rent out your home short term. This straightforward strategy takes advantage of space that you're not using anyway and turns it into a money-making opportunity. If you're going away for the summer or have to be out of town for a while, or maybe even just want to travel, consider renting out your current space while you're gone. Opportunity. You can list your space on any number of websites such as Airbnb or Vrbo and set the rental terms yourself. You'll collect a check for your efforts with minimal extra work, especially if you're renting to a tenant who may be in place for a few months. Risk. You don't have a lot of financial downside here, though letting strangers stay in your house is a risk that's atypical of most passive investments. Tenants may deface or even destroy your property or even steal valuables, for example.
17. Affiliate marketing. With affiliate marketing, website owners, social media influencers, or bloggers promote a third party's product by including a link to the product on their site or social media account. Amazon might be the best known affiliate partner, but eBay, Oin, and ShareSale are among the larger names, too. Both TikTok and YouTube have become huge platforms for those looking to grow a following and promote products. You could also consider growing an email list to draw attention to your blog or otherwise direct people to products and services that they might want. Opportunity. When a visitor clicks on the link and makes a purchase from the third-party affiliate, the site owner earns a commission. The commission might range from 3 to 7%, so it will likely take significant traffic to your site to generate serious income. But if you can grow your following or have a more lucrative niche such as software, financial services, or fitness, you may be able to make some serious coin. Affiliate marketing is considered passive because, in theory, you can earn money just by adding a link to your site or social media account. In reality, you won't earn anything if you can't attract readers to your site to click on the link and buy something. Risk. If you're just starting out, you'll have to take time to create content and build traffic. It can take significant time to build a following, and you'll have to find the right formula for attracting that audience, a process that itself might take a while. Worse, once you've spent all that energy, your audience may be apt to flee to the next popular influencer, trend, or social media platform. 18. Sponsored posts on social media. Though you have a strong following on social media such as Instagram or TikTok, get growing consumer brands to pay you to post about their product or otherwise feature it in your feed. You'll need to keep filling your profile with content that draws in your audience, though. And that means continuing to create posts that grow your reach and engage your followers on social media. Opportunity. Leveraging your social media presence is an attractive business model. Draw eyeballs and clicks to your profile with strong content and then monetize that content by setting up sponsored posts from brands that appeal to your followers. Risk. Getting started here can be a catch-22. You need a large audience to get meaningful sponsored posts, but you're not an attractive option until you get a meaningful audience. So you'll have to focus a lot of time first on growing your audience with no guarantee that you'll be successful. You can end up spending tons of time following the trends and building content in the hopes that you eventually get the sponsorship that you're aiming for.
19. Advertise on your car. You may be able to earn some extra money by simply driving your car around town. Contact a specialized advertising agency, which will evaluate your driving habits, including where you drive and how many miles. If you're a match with one of their advertisers, the agency will wrap your car with the ads at no cost to you. Agencies are looking for newer cars, and drivers should have a clean driving record. Opportunity. While you do have to get out and drive, if you're already putting in the mileage anyway, then this is a great way to earn hundreds per month with little or no extra cost. Drivers can be paid by the mile. Risk. If this idea looks interesting, be extra careful to find a legitimate operation to partner with. Many fraudsters set up scams in this space to try and bilk you out of thousands. Other passive income ideas. 20. Flip retail products. Take advantage of online sales platforms such as eBay or Amazon and sell products that you find at cut-rate prices elsewhere. You'll arbitrage the difference in your purchase and sale prices, and may be able to build a following of individuals who track your deals. Opportunity. You'll be able to take advantage of price differences between what you can find and what the average consumer may be able to find. This could work especially well if you have a contact who can help you access discounted merchandise that few other people can find. Or you may be able to find valuable merchandise that others have simply overlooked. Risk. While sales can happen at any time online, helping make this strategy passive, you'll definitely have to hustle to find a reliable source of products. Plus, you'll have to invest money in all of your products until they do sell, so you need a robust source of cash. You'll have to really know the market so that you're not buying at a price that's too high. Otherwise, you may end up with products that no one wants or whose price you have to drastically cut in order to sell.
21. Create a course. Your own popular strategy for passive income is creating an audio or video course, then kicking back while cash rolls in from the sale of your product. Courses can be distributed and sold through sites such as Udemy, Skillshare, and Coursera. Alternatively, you might consider a freemium model, building up a following with free content and then charging for more detailed information or for those who want to know more. For example, language teachers and stock picking advice may use this model. The free content acts as a demonstration of your expertise and may attract those looking to go to the next level. Opportunity. A course can deliver an excellent income stream because you make money easily after the initial outlay of time. Risk. It takes a massive amount of effort to create the product, Tricitter says, and to make good money from it. It has to be great. There's no room for trash out there. Tricitter says you must build a strong platform, market your products, and plan for more products if you want to be successful. One product is not a business unless you get really lucky, Tricitter says. The best way to sell an existing product is to create more excellent products. Once you master the business model, you can generate a good income stream, he says. 22. Rent out a parking spot. You have a parking space that you're not using or that could be used by someone else. You could trade that spot for some cash. It could be an even better setup if you have a larger area that could fit several cars, or that would be useful for multiple events or venues. Opportunity. In particularly high-demand areas or during high-demand times, for example, during a concert or sporting event, your parking spot could be worth real money. For example, if you live near a place that has frequent commuters but that is strapped for parking spots, you might have a money maker on your hands. You might have the best chance of turning a profit by renting to someone who needs the spot on a daily basis, rather than for one-off events. Risk. This idea might not be particularly risky, but you do want to make sure you aren't violating any restrictions from your place of residence or other entity by renting out a parking space. It's probably worthwhile having a disclaimer of liability as a condition of parking in your spot, too.
23. Rent out useful household items. Here's a variation on renting out an idle car. Start even smaller with other household items that people may need but that may be collecting dust in your garage. Lawnmowers, power tools, mechanics tools and toolbox, tents or large coolers. Look for high-value items that people need for a short period of time and where it might not make sense for someone to own the item. Then put together a way for clients to discover your inventory and a way for them to pay for it. Opportunity. You can start small here and then scale up if there's interest in a particular area. Do people suddenly want a tent for weekend camping when the weather gets warmer or cooler? Figure out where the demand is, and then you could even go by the item, rather than having it right on hand. In some cases, you might be able to recoup the value of the item after a few uses. Risk. There's always the possibility that your property is damaged or stolen, but you can mitigate this risk with contracts that allow you to replace the item at the client's expense. If you start small here, you're not exposed to much risk, especially if you already have the item and you're not likely to need it in the near future. Pay particular attention to liability issues, especially if you're renting out equipment that has the potential to be dangerous, for example, power tools. 24. By a local business. A local business offers you the potential to generate a cash flow stream through an existing and established company. If the business is profitable enough, you may even be able to hire a manager to run it for you while you make only the biggest decisions or none at all. You may be able to get an attractive loan to buy it so that you put less of your own money at risk early on. Opportunity. Local businesses may have attractive and profitable niches that you can buy into, and ones that cannot be easily replicated by competitors. You may be able to piggyback off the seller's expertise or credentials, especially at the start as you get up to speed. Sellers may be willing to finance part of the sale, giving them some incentive to see the business succeed. Also, you may make part of the purchase price contingent on certain profit goals or other metrics. Risk: you'll need to carefully vet any potential acquisition candidates, lest you end up with a business that's much less profitable than it appears or that has fading prospects. It can prove valuable to work with experienced and honest brokers to get the best deal and avoid pitfalls, or hire a consultant to help evaluate a potential deal. In addition, if you're hiring a manager to run the shop, you'll want to be sure they're honest and competent, or you'll have problems. 25. Buy a blog. If you want to get into the blogging game, consider buying one and skipping the line on building it. You can get the contacts and relationships of the prior owner and may be able to bring your own, too. And you can be generating income from day one rather than building and hoping. Opportunity: buying a blog gets you in the game today rather than tomorrow, but you'll want to be already knowledgeable and passionate about the subject. It will be even better if you have a few ideas to improve the blog, better content, higher efficiency, lower costs, etc., so that you can leverage it into greater profitability than might have been indicated by the purchase price. Risk: a blog, like any business, is not that liquid, so if you decide you want to move on to something greener, you may not get what you paid for it or even be able to sell it at all. And of course, you have to be able to gauge the market effectively, producing content that readers want or that attracts sponsors or other revenue drivers. Which passive income source is best? The question of which passive income source is best depends on several factors, but some of the most important include the amount of money you have to invest, the total opportunity size, your interest and ability in the area, the amount of time you need to invest, and the potential to succeed. Typically, the lower the barriers to entry, the more crowded the field of competitors and the lower likelihood of success. So you'll need to weigh the opportunity against these factors and see which passive income strategy works best for you. But it can be helpful to have natural ability and an interest in your target area because these can help motivate you in the early days when things are likely to be tougher. There are passive income opportunities for people who are starting out with some money and even those who have no money to start. How can I make passive income with no money? If you have little or no money to start, you'll have to rely mostly on your own time investment to power you through, at least until you build up a little money. That means focusing on passive income sources that take advantage of the following traits, an area where you're an expert. Here you can build your expertise into a useful product or service for consumers, for example design, software coding, and others. An upfront work-heavy opportunity. You'll need an opportunity that requires a time or work investment, such as creating a course, building out an influencer profile, or other options. In effect, you're substituting your time for your lack of capital until you can get enough capital to expand your set of opportunities. How can I make passive income with money? Money can provide you with more passive investment opportunities. If you have money to invest in a passive opportunity, you have not only the opportunity set above, but a new range, too. Money is a prerequisite for taking advantage of the following passive income areas. Investing in dividend stocks, preferred stocks, or REITs. Investing in stocks means you need money upfront, but you'll receive some of the most passive forms of income around. Save with bonds or C-DIS. Other purely passive activities include buying bonds or C-DIS. Here you can use your money to make money with little or no effort on your part, if that's what you'd like to do. Of course, you could pair your money with a lot of time investment to move into an even more lucrative niche, too. How many income streams should you have? There is no one-size-fits-all advice when it comes to generating income streams. How many sources of income you have should depend upon where you are financially and what your financial goals for the future are, but having at least a few is a good start.